Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take another look here at Ethereum, see what's going on, and this will be part of my daily routine now because I get a lot of requests from it, and of course makes perfect sense to kind of help you understand what's going on, not only when it's dire straits like we're seeing right now, but also in good situations too. So we'll take a look at everything and kind of help understand, and I like to look at big picture and best practice, help you kind of navigate this environment with some hopefully some good recommendations. So we'll go ahead and take a look at that. If you are new to the channel, I'm not a financial advisor. Love teaching people to trade. I really hope you can learn something here today, and I'm just passionate about helping people become better traders. So CryptoCache.tech is a site, link in the description below. Check that out in your own time. Let me know if you want to become a better trader. I have a trading academy, a community, and send out signals for every trade that I take, and we've been hitting some really nice profit targets lately. 80 to 110% returns on our leverage positions. Obviously, spot exchanges are on pause for the moment because of the fact that the price is going down. Can you really only leverage your way to the downside for a short position? That being said, what we're going to look at here, of course, with Ethereum isn't just best practice and big picture. We're going to look at some dollar cost average targets and kind of take a look at previous data to understand future data. Kind of help us, get that big picture that I like to kind of drive home. So first of all, we've got this previous support level that was tested, I think I mentioned this yesterday, 4 times previously. It's right around 1700 as a round number. Then we lost that support level, obviously, 3 days ago. It just drove straight through it. Okay, so we can't expect that to be a support any longer. And what does that become? It becomes a resistance. So 1700 is probably going to be a likely shelf for Ethereum if it were to try to rally back up and come up again. Okay, so just be mindful of that. Moving forward, also, we want to kind of acknowledge and take a look at some previous support levels. And we can kind of see a line here in the sand where the price was unwilling to go above, but also didn't go below, minus the small candle wick here later. In other words, you can see how the price was testing this resistance level multiple times, came up, came down, and retested that support and established it as a support and continued upwards. So that being said, we want to use that line, kind of draw it out here, and see if that is synonymous in a lot of ways with our current support level. And what do you know? Candle wick wicked all the way down to just about that level, very, very close, plus or minus a couple dollars, essentially telling us and reaffirming that that is probably a likely good support. So 1410, I would say, is a pretty round number, 1420 even, you could round up a little bit, but basically right around 1410, 1420 is a key level of support that we can expect to likely have some support. And what I mean by that is just simply put, in the past, it's worked very well as a support, just like this did too as well. It had to retest it multiple times in order to break. So most support levels will be retested a lot before they're actually broken. Okay, so that being a first test, so to speak, of this level in years, tells us that we should expect the price to not go lower than that. Okay, at least in the immediate future. Bitcoin hits 24,000 or 22,000, maybe even 20. Then yeah, of course, we're going to see a price point lower. We'll probably see in the 1200 range for Ethereum. That's generally what we're looking at there. So again, just kind of throwing that out there. That's kind of the standard stuff that, these are all things that I like to look for dollar cost average targets and or profit targets to the downside. So, if you were to short, essentially, not saying you should, but if you were to, you would take a short from 1500 to maybe 1430. You take a price point just above that key level support, and that's usually where the price action will get filled. Okay. Again, just kind of some standard stuff, but I'm going to leave these Fibonacci retracement levels the way they are, just based on that previous support level being right here at 1. Really just telling us that, if the price were to come down lower than 1410 or 1420, we will see 1200 as a rough estimate for the next key level Fibonacci that may be hit eventually. Okay. And again, maybe, likely, probable, most likely, whatever terms you want to use there. Anything that isn't exact, but also leaning more towards. So in other words, we're likely going to see the price action come lower and retest this level. So, take that how you will. Anyways, taking a look at this here, let's go ahead and look at the standard stuff and go ahead and wrap this up. We can see we're testing 30 on the RSI. That's a standard support level in most cases. That's synonymous in a lot of ways with 1410, as we've already addressed. So that does kind of reaffirm the fact that the price shouldn't go much lower than that in the immediate future. All right. So there's that. There's also a MACD divergence kind of telling us that the bears have taken control. This bullish momentum is gone. Obviously, it was very short-lived. It really wasn't bullish at all anyways. It was more like a hidden bearish divergence, but generally speaking, it's not really something we need to acknowledge any longer. In other words, the likelihood of the price shooting up from here is lower than the price going down lower from here. I know it seems crazy and nonsensical based on the simple fact that how low can it go? Like, we're at this point where it has to continue to go somewhere, and the likelihood of it going down based on the overall market is pretty likely, especially if we get a gap down from the traditional markets on Monday. I brought this up in my Bitcoin video here today, whereas you can kind of see this significant variance here where the price action dipped on Friday from Thursday. And when you have a gap down, because you don't have that in cryptocurrency, but in traditional markets you do because there's an open and close, when you have that gap down, it really sets things in motion. A lot of times it can push the price action further. As you can see here, we had a gap up where the pre-market hours came up higher and essentially drove the price action up. So that being said, we could very well see a likely continuation a little bit lower on the open on Monday based on that sentiment of that continuation to the downside with that gap to really kind of just shift things over. Now again, there's no guarantees because you look at the correlation here, they're not exactly the same, right? But can you not admit that here at its highest point back in late November, we've digressed significantly? We can see the exact same thing for Bitcoin, and we can see the exact same thing for Ethereum, all right? So for lack of better terms, it is important to understand and acknowledge the traditional market and how it factors in and essentially can sway things in our favor. So if the regular market starts to recover, it's a great chance we'll start to see the same thing from Bitcoin, okay? It's just the traditional market is fairly overinflated, and it's, for lack of better terms, and that's also factoring in. All right, enough about that. That's kind of just some extra little side stuff there. Let's take a look at the 4 hour and kind of start wrapping it up. It's probably going to be very similar to Bitcoin in that sense, where we had this over-exhaustive state on the 4 hour. Yep, exactly. Bitcoin did the same thing here. It went sideways over here. We hit a 9 on TD sequential, came all the way down. We're in this extreme overtime. We're barely getting a reset now because the price action was able to recover and get a small little short squeeze out. So again, a lot of short squeezes occurred, at least for Bitcoin recently, to drive the price action higher. There was like 2 or 3 million contracts that got liquidated right at the price point of like 28,000. So that little squeeze kind of helped kind of recover things for the moment, but I don't think it's here to stay. Okay, so I wouldn't expect the price to just continue to do one of these moving forward. The likelihood is pretty low. It could still happen, but will it? Probably not, based on the overall sentiment and the way things are going. This is going to be a kind of a weird week for us because we got that Fed meeting later in the week. We had the CPI data come out with higher, 0.3% inflation. All those things are kind of coming to a head, and that's the reason why we're seeing extremely high volume on a weekend. It's very abnormal, very unusual, but there's so much fear in the market that these large retail investors, possibly even whales as well, are selling their positions and pushing the price action lower and averaging their price down. Okay, so again, all we can do is just kind of get on board with what they're doing and follow along. That's truly how you become a good trader, is understanding how the market movers are working, okay? And they're pushing the price down. They're probably going to continue to push the price action down until we hit some kind of exhaustive state. We're almost there. We're at 6 days of downside for Bitcoin. So Ethereum, probably pretty darn similar. In fact, let's go ahead and take a look. 1, 2, 3, yeah, 6 days as well. Again, it's following Bitcoin to a T, but also further exaggerated. In other words, if we take a look here at Bitcoin, you can see the price action's mostly sideways and now down, whereas Ethereum is mostly lower lows and lower highs and just continuing down. So it's basically has like a descending type of pattern versus Bitcoin kind of basically being range bound. So that's not a great sign. It basically just implies that Ethereum is no longer, it's coupled negatively or adversely with Bitcoin. So a 1x from Bitcoin is going to be a 2 to 3x from Ethereum. So the positive side there is that when Bitcoin recovers, Ethereum will do so very well. So I would definitely recommend dollar cost averaging on your way down. Set at targets, 1500, 1420, 1250, somewhere in those ranges would be really good DCA targets based on key level supports. All right, so let's go ahead and summarize here. So the 4 hour, we already saw that. We're good there. We're well below 30 on the RSI. That's extremely important to recognize, because when you go to that exhaustive state, that overextension, the likelihood of a pullback is pretty high. In other words, that's why we saw this little short squeeze from Bitcoin, and that's why we're seeing the price action recover now, because it's so darn low that people are like, man, this is a good deal. We have to get in. So in that sentiment, if you took that that thought process alone and used it, that could possibly imply that the price will continue to higher from here, but not much higher. Again, we got this strong resistance level here at about 1700. We shouldn't expect the price action to break above 1700 in the immediate future, unless of course it can get back up above some of these moving averages first, which are not happening yet. We'll get there eventually, but for now, that's essentially what we're looking at. And if we take a look at the MACD convergence as well, it's trying to converge, really just telling us that that the bearish push is potentially over, which is a very, very strong push to the downside. So it's naturally going to kind of bounce back when it has that strong of a momentum. So I wouldn't really count on what you see there happening as far as a convergence per se. You never want to guarantee or never use that as the only qualifying factor. Because again, obviously there's no guarantees in trading, but generally speaking, if you can get that in combination with a break above the cloud on the Ichimoku on the 1 hour, then you're looking pretty golden. Let's in fact take a look at that here. It's probably going to be, yeah, this is ugly. Good news is, the price action, even if it were to go sideways from here, the cloud will naturally break above the cloud. So in that sense, we could very well see a convergence on the MACD on the 4 hour. Concurrent with a break through the cloud. But for right now, lagging span is basically telling us that we do not want to take a short. We want to close our short positions if possible because the likelihood of a reversal is higher due to that over-exhaustive state we've already looked at. And of course, we got the baseline below, or correction, above the conversion line. So that's typically disadvantageous as well. So in other words, we have only really one indication here of keeping your short position open. So if you're a risk taker, perhaps you maybe want to consider that. But I don't think that a short would essentially go much further here, okay? Because I do believe that the price will probably come up. A likely scenario here is the price will inevitably kind of work its way up to 1700. Bitcoin will probably retest the 38,000 range, or sorry, 29,000 range. And when that happens, it'll hit that resistance shelf that's there. I think it's 28.6 for Bitcoin. And it'll inevitably get rejected and come back down. That's when you want to open your short position. So I would say wait for the price to recover and then open a short, or possibly take a long right now. Just take very small position sizes, so we really don't know what's going to happen next. It's a very difficult market to anticipate for the moment. There's not a lot of predictability, except for the fact that greed is real. And we know that the whales right now are being super greedy. There's also a lot of fear, and you can kind of estimate what's going to happen next with a significant amount of fear. Until that fear subsides, shorts are going to win. It's just all there is to it. So try to be very careful and cautious with long positions. I would expect whatever trade you take to lose that, depending on your stop loss, or just have no stop loss at all. It sounds crazy, but we've been trading without a stop loss for a little while, and it's been working very well based on the simple fact that we're stuck in a range. And now that we've broken down below, we can use that resistance level as a potential shelf and kind of base our trades off that. Okay. So again, 1700, you see the price action retesting 1700. Great chance we're going to see the price reverse at that point. Okay. Just some friendly advice there, or just thoughts from what I look for and how I do it. I teach all this in my trading academy. So if you want to become a better trader, CryptoCache.tech is a site. Link in the description below. I actually provide you with hours of footage kind of explaining how to navigate specific markets, and a lot of basics too, of course. So keep that in mind. Beginners are definitely benefiting. The last thing too, of course, is the signals. I do structure trades effectively, at least in my personal opinion. They keep me profitable. I would say honestly, last couple months probably more 70% conversion, but traditionally right around 80%. And that really is the only reason why I'm successful at that is because I set profit targets. And I always have a trailing stop loss that adjusts when I hit my targets. So as soon as we hit profit target 2, the trailing stop adjusts to break even. And we're always remaining profitable in that sense because you're taking profits in the right way. Okay. So again, just something to kind of consider. Completely optional, of course, but nice little added benefit there. But honestly, I don't see much else here we can really talk about. We looked at the 1 hour. We are overexhausted. We got this potential turnaround. I would just anticipate the price action having difficulty passing 1700, but it might slowly trickle up over the next couple of days. But again, we really got to pay attention to the market open on Monday for traditional markets. If we get another gap down, you can expect Ethereum to drop as well. And once again, Ethereum is almost 3x of Bitcoin. I think Bitcoin had a correction of 3%, and Ethereum is closer to 9 to 10%. So please understand that it's an exaggerated scenario and state, but it's still a good value, right? So to me, I know it's crazy, and it sounds weird, but like when Ethereum was at like 3,000, almost 4,000, Like, we were all wishing and hoping that we'd gotten in at 1700. Now we're at 1520 and we're whining and sniveling about that price, right? It's kind of an interesting thing. So, you know, in that sense, big picture, Ethereum has great potential. So is Bitcoin. Make sure you add to your positions and continue to dollar cost average wherever possible, but do not put all of your eggs into one basket. Once again, dollar cost average targets here based on these previous support levels would be somewhere in the range of about 1410, 1420. So you can get filled. And then of course, right around, I would say 1210 or 1220, just above that key level resistance or support level. And what that basically just does is tells us that, you know, we're going to be able to get filled a lot easier and better if you don't put it right at the exact support or resistance level. You want to do just a cut above. So, you know, 1.5% above and you're all good. That's usually how I set it. All right, anyways, I hope this made sense and you can hopefully benefit from this, of course. Thank you so much for joining me. We'll look forward to seeing you in the next video. Have yourself a great rest of your day. Happy Sunday. You take care.